Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. On the show this week, we've got Patrick Pinschmidt, who is a general partner and co-founder at MiddleGame Ventures, a financial technology venture capital fund focused on early-stage investments in Europe. Previously, Patrick was a Deputy Assistant Secretary at the U.S. Department of Treasury, where he served as the first Executive Director of the Financial Stability Oversight Council. Prior to his government service, Patrick spent a decade as a sell-side financial institutions and capital markets analyst, where he was a lead analyst at Morgan Stanley and Merrill Lynch for the brokers, exchanges, and financial technology sector. He's a grad at Georgetown University's School of Foreign Service and Columbia University's Graduate School of Business. In this episode, Patrick and I dive into the life experiences that delivered him to venture capital before we talk through MiddleGame Ventures' Iris Seed Fund and what he looks for in fintech founders. We also get into Patrick's lessons learned as an investor, how he looks at deals, investing in lines, not dots, and the human focus of early stage investing. All right here on Money Never Sleeps. Thrilled to be having this chat with you. And I look back in my calendar to see when you and I actually first met. And I knew it was at Matt the Threshers, which is on Pembroke Street in Dublin. But it was actually September 3rd, 2018. Nearly 5 years.
Yeah. No, well, Pete, it's great to be on, and sorry Owen couldn't join, but yeah, that's right. You and Owen were kind of there when I started making footprints in Dublin, kind of talking to different ecosystem folks. And I guess what's typically done is, oh, you should talk to this other Yank called Pete Townsend, and I think that's how I ended up on your tracks.
Yeah. That was Mai Santa Maria. So shout out to Mai. Thank you, Mai, for introducing us.
Thank you, Mai. Yeah.
She's awesome. So let's get started with just give us a rundown, an intro into Patrick Pinschmidt and how you got to this point with what you're up to and what that is.
Okay, well, that's a broad way to begin, but let me give it a stab. So I'm with MiddleGame Ventures. We're an early stage fintech VC focusing on the European market. And I guess about 5 years ago, I started scouting Europe for another office for us. We were based in Luxembourg, and we were close to launching our first fund. And I was spending time in Ireland talking to potential LPs, talking to folks in the ecosystem, talking to startups. And for a host of reasons, I decided to push forward with Ireland. And that's kind of how I ended up here talking to you. So I guess to give some context, my entire career has been spent in financial services. I started out on the sell-side research at Merrill Lynch and Morgan Stanley as a research analyst covering banks, asset managers, exchanges, and financial technology before it was called fintech. And, this was pre-crisis, and it was a very interesting time. Obviously, a lot of growth and then a lot of pain with the advent of the crisis. And I had an opportunity coming out of that crisis to return to Washington. I'd gone to school in Washington, D.C., and, always had an interest in public policy and getting involved at some stage. And, the stars had never really aligned for a host of reasons, including, I'm a Democrat, and there wasn't really a Democratic administration in the early 2000s.
That makes a lot of sense. So what I wanted to ask you a bit about as well is that your role as Deputy Assistant Secretary at the U.S. Department of Treasury, where you served as the first Executive Director of the Financial Stability Oversight Council. That's a mouthful, right? That very topical experience in light of what's happened in the U.S. in the last few weeks. Any insights from your prior roles on what you see going on over there right now?
So when Obama was elected and you had the financial crisis, there was kind of the moment was right for me to sort of, take the plunge and try and do something in DC. And I was fortunate enough to land at Treasury and help stand up an office called the Financial Stability Oversight Council, which was basically charged with connecting all the dots across the U.S. financial system among the different regulators and among the different data that's provided by companies and across different markets to make sure systemic risks do not fall beneath the cracks. And clearly that was one of the core lessons of the financial crisis. The U.S. has very much a balkanized regulatory system, and you weren't going to create an uber regulator in charge of everything. You were going to kind of keep all the regulators in place because Congress wasn't going to back a significant regulatory restructuring. So the compromise was creating this entity in the U.S. Treasury Department called the Financial Stability Oversight Council. And so to your question on SVB, I mean, yes, certainly the last few weeks have brought back memories of my time in D.C. I love my role in DC, but I feel a certain amount of empathy for my colleagues who are there right now, because I can imagine they're not getting a lot of sleep, and they're dealing with a whole lot of different issues. And I think when you look at SVB, it's certainly a teachable moment for bank management team, regulators, and of course shareholders. And I think there's a lot of work to be done.
Yeah, there definitely is. And there was SVB and obviously Silvergate before them, and then Signature Bank, and First Republic almost went under, and it's been one after the other. But it's I think COVID just changed the world, not only from a health and human perspective, but from a financial perspective. It's just been so many unexpected bumps and troughs, and just injections of capital and interest rates and everything that have just created this macroeconomic quagmire almost around the world. And it's going to take a while to get out of it. But listen, wanted to really hear more from you about the fund as well. When you and I first met, Patrick, back in 2018, I had just parked the second of 4 venture capital fund launch that I had been involved with between 2016 and 2021, and was unknowingly moving on to my third unsuccessful project to get a fund launched. You guys have done well in getting your foothold into the Irish market with the Irish Focus Fund. Maybe tell us a bit about the strategy for investing in Ireland and how you've gone about that and what some of the learnings are.
Yeah, no, a great, obviously foundational question. So we, as I noted at the onset here, when we set up the fund, we all got together in 2017. My 2 partners came out of a fairly large fund, but through a family office structure. So they kind of came at this with a significant track record and had some strong operational experience. And my background was a little bit more, well, obviously on the regulatory side, as well as on the incumbent financial services side. And I think, as you know, Pete, when you're setting up a fund, you can kind of dream and a lot is possible. And it's only when you get the capital you can kind of actually do things. And so at that stage, through talking and getting to know my partners, we decided to make a run at it. And, I joined up with them in 2017. And then, fast forward 2-3 years after a lot of fundraising, we set up the fund, and we decided to have a European fintech focus, because we believed we could, as 3 partners, that would maximize our kind of leverage in the European market, given our touch points in the US as well as across Europe. And, being fintech specialists too, that would be something differentiated and we thought would be welcome. And initially, coming to Ireland, clearly there's some interesting fintechs. We had the support of Enterprise Ireland and some other LPs. And generally speaking, obviously Dublin Airport's easy. The rest of the continent's relatively easy to get to. It's a good jumping off point to the rest of the continent. But I think what has surprised us is the amount of activity and the quality of a lot of the startups. And we've done 6 investments through the fund that was launched in 2019. And, kind of through those touch points, we realized, well, there's a way here to get involved actually earlier. And, the legacy fund is more of a Series A focused fund. And we decided, well, we should start talking to people at the seed stage level and really kind of get in on the ground floor. And that's what motivated us to pursue a seed fund, again, with the support of Enterprise Ireland, and that we're in the process of doing a final close for the coming months. And we've already made 4 small investments through that fund, and we have 2 or 3 more in the pipeline. But again, I think where we sit, we're in the fortunate position of being a fintech-specific fund that can help startups scale commercially, whether it's across Europe and into the US through strategic partnerships, or help with subsequent funding rounds, or even the current funding round by bringing in other investors, either within the Irish market or outside the Irish market. But, fintech is a little bit of a different animal. And I think sometimes it helps to have an investor on board who can help validate and help, really take a hands-on role in helping bring other investors in and then help that business scale as it moves forward.
Definitely. And what are some of the basic metrics in terms of check size and, the kind of traction that you look for and those types of things?
So We'll invest from seed through Series B across both fund vehicles. Specifically at the seed level. So it's at the at the sort of the more mature level, we'll put in we'll go up to 7 million, but at the seed level we can go as low as 250, 300, and we'll probably max out at a little over 1 million. And obviously, as you know, Pete, at the seed level, it's really all about team and technology and product. Traction is great, but it's sort of optional. But if there's some evidence of traction, we'll take that. But we're really trying to understand is this a backable team and a backable solution, and is there's something we can kind of help move along. And I think that the one metric we try to adhere to in terms of our engagement is just have as many meetings as possible, get to know the founder and the founding team, and really understand what vertical they're going after. And if everything adds up, then let's try and move forward together.
I gotcha. Yeah, and that was one of the big lessons learned that Owen and I talked through when he asked me about what I thought from the first 1,000 deals that I've looked at through Techstars. And it was investors invest in lines, not dots. And like you said, have as many engagements, interactions as you can with people, right?
Yeah. I mean, that's absolutely right. And I think, you'll never regret taking another meeting in a startup you're interested in, because you always learn something more. And I think, and it's not just the founder and the CEO, it's who does that person surround him or herself with? What's the quality of their team? What's the interaction like? And it's a learning journey. I mean, we're not trying to torture people, but you do need to invest the time. And it's frankly, the founder needs to invest the time also, because when a seed investor comes on, I mean, that's generally going to be kind of a long relationship, and there'll be many twists and turns, and there'll probably be, hopefully good times, but there'll be some uncomfortable conversations and some difficult choices along the road. And ideally, if you're in a position where you can pick your investors, it's important that the startup does that due diligence also, because, while capital is capital, and that's important, you also want strategic capital to help, really be a partner as the founder grows the business.
Yeah, definitely. And what you just said there is critically important. Pick your investors, right? And that what I say to founders, that you need to go out and do the research on your market in the same degree or with the same degree of voraciousness as the craziest salesperson you've ever met researches their target customers, right? And that you need to understand investors, and you need to understand, is it, do they even invest in my stage? Are they writing the check size? Are they investing in this thematic that I'm involved with? And there's so many things that go into this that a lot of founders, sometimes when they're new to fundraising, they think, well, oh, they must not like me. They must not like me at all. And usually, as from an investor perspective, it's me, it's not you, and that you've got investors behind you, right? That you've signed up, and that they've agreed to certain covenants and requirements and terms and so on and so forth, that when you talked about the check size and what rounds you're going to invest in, that's because you've made some representations to investors, right?
Yeah. I mean, yeah. So going through your first funding round can be quite painful and an emotional experience for all parties involved, because the lawyers tend to take over. And, obviously a key goal of both parties is to, kind of limit the pain and time and money that's spent on that process. But, that is table stakes for taking institutional money. And I think that's, the first question a founder should ask him or herself is, do I need venture capital? Because, there are frankly a lot cheaper ways to fund your business and a lot less dilutive. And some businesses, that may not be the right choice. And that's kind of like that threshold question. And the other thing is, don't necessarily wait till you need capital to start talking to investors. And I think if there are a lot of founders out there, and, I think VCs are just as guilty of this, is, waiting until a startup is in the market and then the outbound and the inbound. I think the most valuable thing is, having a conversation with a founder a year before they're raising capital. And not to give away kind of our secrets is, you get a lot from that conversation. You understand, you kind of develop a compass in terms of what they're trying to do with the business. And you have a much more productive follow-up conversation, whether that's 6 months later or 12 months later. And you kind of have your check marks and your map to kind of gauge that conversation with. And, Pete, I'm actually reminded of, back in the pre-COVID days when I was over here, I think you introduced me to a great founder, David Heath,
Yep.
the CEO of Circuit. And I guess it was 2018 or 2019, it's probably 2019. I met with him, and, obviously Circuit, very impressive in terms of what they're creating, a confirmation platform for the audit space and much more now today. But, frankly, it was very early days, and, I didn't necessarily understand or appreciate, the market opportunity, but, and we, we didn't invest at that stage, but, he came back and we talked, a year ago, and, he executed on everything he said he would 3 years prior, and then some. And, it made it a very easy decision to decide to, co-lead the Series A when that hit the market early last year, because we kind of had that reference point from 2-3 years prior. And again, this is somewhat of an extreme example because there was a 3-year gap between conversations, but, again, it's, just getting in the conversation. And, if nothing else, be selfish about that. Obviously the VC is being selfish in the sense of wanting to know you and quote unquote, develop a cheat sheet for follow-up conversations. But the startup founder should be selfish too, in terms of, testing the VCs, getting a sense for, what they can do in terms of introductions, what can they do in terms of help, and kind of, getting your pitch together.
Yeah, definitely. David is a great founder. Shout out to David Heath. Absolutely. He's close enough to me neighborhood wise, but I know he's been quite intensely focused on even scaling Circuit to a huge degree recently. So one of the interesting things about, I think thinking back a few years, is that, it was a different landscape back then, pre-COVID. And I remember reading something on your website, on the MiddleGame Ventures website, that I'm like, I totally identified with. And I saw some of, what Circuit was doing in what you guys were interested in investing in. And, there's a lot to that name, MiddleGame, right? And I think it's Pascal, your partner, who is a big fan of chess, isn't he?
That's right. The middle game is a chess term and not a gaming term.
Exactly. There's the beginning game, there's the end game in chess, and it's how you execute in the middle game that is critically important. And, I think that resonates with both the stage of where you're investing, in that you've got to get them to the middle game, and that at that point they're raising capital from, instead of the, up to 7 million range, they're raising it up to 50 to 100 million range. But also then, looking at the financial markets and fintech and how all that's unfolded, and seeing that, there's so much opportunity in what happens in the middle of finance, right? And that there's so many opportunities to provide new solutions in there that can just make the global financial system operate smoother. And, it's always hard when you're trying to invest in things that are, bringing costs down rather than creating new revenue. But if you have the right approach and you've got people who are experienced in that space, they can tell the ones that are really going to make a difference in the middle game versus those that will just be afterthoughts, right?
Yeah, no, that's very articulate and well stated. Yeah. We should have you help us with our coffee on our website.
I could pull these things out of thin air sometimes, Patrick. So that's all. That for what it's worth. Yeah. But thinking about, as I mentioned earlier, Owen and I did have that chat. We talked about the lessons learned. We talked about investors investing in lines, not dots, and you're clearly speaking to that in this conversation we're having right now. Are there any models that you apply yourself in terms of the first conversations that you're having with founders, and what are some of the signals that you look for? Obviously not giving it all away, right? You don't want people, acting to cover off what you and I are talking about right now in terms of the conversation is going to have with you. But I have this, team market traction product that I work into every conversation. And I try to tick all 4 of those boxes and make it a natural conversation. When you have that natural conversation, things tend to come out of the wash. Anything that you try to follow to keep things moving smoothly when you're chatting with founders?
Yeah. No, I think your framework is spot on. I mean, the earlier the company, the more focus on team and technology. The later stage the company, the more focus on product market fit and the ability to scale. And then kind of anything in between comes in between. And, I think that the challenge is, when you're in the market and you're investing across Europe and you're looking at early stage startups, you're going to talk to a lot of people. And the challenge is to kind of arrive at some quick no's and then also be able to decide which are the ones you want to follow up with and spend more time on. Because I think the biggest challenge for an investor is prioritizing one's time. And in order to help do that, and not saying we always get it right, is to, have a view on kind of, what are the sectors that are most promising and understand which startups are operating in that environment and, try and get in front of them earlier than you need to develop a relationship to become smarter on that sector, but also to understand what individual startups are doing. And then, obviously, when you have that first conversation, it's really getting a sense for that founder and, particularly at the seed level, because, whenever they show you on your deck, we talk about reference points and kind of, building a map. Whatever they show you on that deck, it's rarely going to come to fruition, whether it's a financial statement or the business plan. There are going to be a lot of pivots. The hockey stick will be flattened a little bit. Mm-hmm. And, that's just a given, but it's understanding kind of the resilience of the founder and the ability to kind of bob and weave as the market, punches you in the face or things happen and you have to pivot. And, I think, the holy grail of founders is, that vision, that strategic vision to sort of see a market opportunity and then develop the technology or the solution to, take advantage of that opportunity. But that's just one part of it. The other part, which is not as sexy, is, having that operational discipline to build a team and to set near-term and medium-term and longer-term goals and hold people accountable day in and day out. And that's more of a grind. And that's the lonely part of the founder's journey. And, that's very difficult to assess based on our first meeting. And, obviously that's where it kind of comes into play. Well, does the CEO have certain strengths and does he or she have certain weaknesses? And, how does the team complement or exacerbate that? And, I think, frankly, there have been a few times where I think we talked to a very interesting founder, a very promising founder, and then you talk to the rest of the team and you're wondering, well, what kind of team is this person building? So, there can be some, false positives, negative positives, or positive negatives, or however you want to phrase that. But, you get that with discussions. But the initial sort of fork in the road is trying to make quick decisions as to, is this a startup or a vertical you want to spend more time on? And then don't be shy about following up and having as many touch points as possible.
Do you guys, do you default to and fall back on specific areas within fintech where that you're going to be able to not necessarily contribute the most, but at least stay on top of things the most and being able to point people in the right direction and make introductions for them after the investment?
Yeah, and so that's the good thing about fintech. It's a very broad space, and there are multiple different verticals. I think as a practice and sort of kind of consistent with our investment themes, we're very much B2B focused, and I don't think we've done anything direct to consumer. There may be a little bit of that, but it's not a primary driver of any of the businesses we've invested in. Which is not to say there aren't good B2C companies out there. It's just, that's less core to our expertise. I mean, we come from the institutional world and financial services. But, I think generally speaking, we want to invest in founders and teams where, we can be involved. We can roll up our sleeves. We can take a board seat. We can, leverage our network. And, our core areas of expertise are in that incumbent space, obviously in the regulatory space. And that's the thing to remember here is fintech is a lot different than some of these other tech verticals. It's been a relatively late bloomer. And I think you talked about that middleware and, when you're talking about MiddleGame. Yeah. And that's, back in the late 90s, back in the late 2009, 2010, 2011, you saw that front end being digitized. Now we're kind of in that middleware being digitized, and then and we're slowly starting to see it in the core. And the way I like to kind of explain that is, again, sort of using my old sell side research hat here when, I used to cover the exchange space and it was going electronic. And, the sort of the life cycle of, taking an instrument that was traded, let's say on the NYMEX or on the floor of the New York Stock Exchange, and putting that on a screen is very compelling because you're essentially digitizing it and you're taking out the friction, you're reducing the costs. And so therefore you get more volume, you rewire it, you expand access, and you lower costs. And those are all the factors we're seeing in financial services as we think about it being digitized, taking out the friction, reducing the costs, expanding access. And, out of that, are going to come a host of new products. And you see that with companies like Waveflyer. You see that with companies like Circuit, the startups that are able to sort of connect the dots and build digital ecosystems in new models that didn't exist previously. And that to us is the real big opportunity. And you can kind of start going down some of the different verticals, whether it's in capital markets, asset management, or open finance, open banking. But that to us is what gets us really excited. And the opportunity here is immense because unlike other, if you're talking about a Google or a Microsoft or even a Meta, those aren't the same type of companies in terms of their ability to innovate as banks. Banks are very poor innovators. They can't attract the talent. They can't retain the talent. And even if they had the technology, they wouldn't necessarily be able to pioneer it. So they have the assets, but they're always going to look for a partner on the outside to sort of implement and drive that technology forward. And it's great for us as investors and participants in the fintech space because there's a partner there and there's an investor there and there's a potential exit there. And our role is driven a lot by helping particularly companies in Ireland where the local incumbent infrastructure isn't as developed as, let's say, the UK or in the US, is providing them the touch points to help test their product and help scale their product with other incumbents.
Yeah. And you touched on a critical point there in that, looking at the financial systems and seeing opportunities to improve. The killer word there or killer phrase you use is increase volumes and grow volumes, increase throughput, and the ability to just unlock and remove this friction allows revenue to be created. And it's not just, okay, we're making the machine work better. It's that what you can build on top of that better version of the machine in order to sell more, right? And sell more financial products. And it's, I love the way that you pull that all together. Is thinking about, Patrick, your journey itself, or your journey yourself, that you and I talked about this once, is that, stepping into venture capital, that, there are all different ways that you can find a reference point for the world that you are stepping into. And whether that's podcast, whether that's reading, whether that's whatever, there are ways to do it. But I think what you said to me that time is that only way to really learn it is to do it, right? Have there been some surprises to you about what you thought the world of venture capital was going to look like before you got into it, based upon what you've seen over the last few years?
Yeah, no, I mean, it's as you know, that there really is no manual to being a good early stage investor. And I think, obviously the table stakes are understanding the markets you're investing in and then, having that compass to, prioritize your time. But I think in terms of kind of the lessons learned is, I think you have to constantly be curious. You have to constantly be talking to people. You have to constantly be challenging your assumptions. And it's also good to surround yourself with partners who kind of look at the world maybe through a different lens. And, so you kind of the sum is greater than the individual parts in terms of, making decisions and challenging different areas of where to play in. And, I think, that's in finding deal flow and making the decision there. But, frankly, if we're doing our job and we're succeeding as investors, 90% of the time we'll be just a supporting actor in a startup's journey. And, it's the founder that's driving that. And we just have to make sure that that person and that team, has all the tools that they might need or might not know they need in order to be successful. And, I think what I learned is, a lot of your best performing companies from a, I guess, returns perspective to LPs are not always the ones you spend the most time on. It's the ones that, have to engineer a pivot or, have really hit up against the wall in terms of their product or their marketplace. And, a lot of gratification, at least from the investor side. It's also a lot of pain on both sides, but, helping that founder kind of navigate that journey and hopefully, finding a way out of a particular predicament and securing some sort of path that gives that startup some momentum that wasn't there before. I mean, there's a lot of satisfaction on that. So when I look back on kind of what we've been able to accomplish over the last 3 or 4 years, I mean, sure, you'd love every investment to be a 10x and more, but they're ones that are less than that, but would have been a lot less had we not been able to help. And there's a lot of satisfaction from that. And I just, from a personal standpoint, I've been lucky to spend my entire career in financial services, doing it from the research analyst side and then the regulatory side. But, when you're investing, it's basically you're wearing a different hat every day. And, every hour of the day, it's a different hat. And, you have to transition very quickly from looking at startups to, helping with the board to dealing with lawyers. And it's not always fun and exhilarating, but the arc of it is extremely gratifying. And, getting to have different touch points along a founder's journey, because, at the end of the day, I mean, what you asked, what surprised me, and I'm kind of gone about this in a long roundabout way. I have so much admiration and awe for a startup founder. I've never been a founder. So, I mean, I'm that's probably not a great thing, but I've done other things. And, I think being a founder takes a lot of guts. It takes a lot of persistence, and, it's quite a lonely journey in the sense that, there aren't that many other people who you can talk to and kind of bounce ideas off of. And, if we can kind of be a resource along that road, I think we're doing a good job. And that's been a key learning.
Yeah, absolutely. And, empathy and humanity can go a long way, right? In that it's crazy with this investment process, this investment framework, that it's, hey, we're investing in people, right? At the earliest stages, you're investing in people, like you said, a little while ago, and that it's that when one of these fails, it's heartbreaking because you're so emotionally involved, because not only are you trying to be an advisor and you are an investor, but you're also a fan, right? You really want this founder to succeed. On the other end, when you see someone just killing it over and over and over again, it's like, well, how can I help? And sometimes it's not what it's not, have you been through this before? It's not, how have you dealt with this challenge? It's that, who can you introduce me to? And that's not always the, hey, an investor and, another investor, help me build out this round. It's just, like you said, someone else that that's been through this, because you've got that network, you've got that experience that can have a incredibly helpful conversation with one of the founders you invested in, and that humanity, that empathy for people is what makes all the difference for me in this space,
Yeah. And that's a key thing, because, you're going to see founders in a lot of different positions in terms of what they're going through. And it's the euphoria of that first check in the door, whether it's a funding round or your first big commercial customer. And then there'll be, other twists and turns and just, being able to devote the time and being a resource and, creating actually a space where you can have that dialogue with a founder. There are founders who don't like to say anything negative and want to kind of keep everything rosy, even when the opposite is happening behind the scenes. So, obviously we're not doing our job if we can't have that open, honest communication, because I think that's the best for all parties.
Definitely. And sincerely, Patrick, that's why you make such a great mentor on the Techstars Web3 program, because you've got that, that humanity and that empathy. So thank you for all that you do for us. Thank you. Listen, we're at the point of the chat where I know that if Owen was here, he would ask his favorite final famous question that we ask everybody on this podcast, Patrick Pinschmidt. What is one thing that people would not expect to know about you?
Well, I guess, Pete, from one American to another American, I guess, I think when I meet a lot of people in town, that they sort of assume I was kind of airdropped into Dublin several years ago. But the truth is, I'm actually half Irish, and my parents live in a small village in County Limerick. So yeah, take that.
I knew that, but most people did not, and it's the name Pinschmidt that would not give that away.
Yeah, so it's Patrick O'Dwyer Pinschmidt, if we're going to use my mom's maiden name.
All right, and there's a good crew of folks that, over the years have dropped into Ireland and I mean, it's just what makes this community here of people coming at things from all different angles, including our friend Kurt Pittman. Shout out to Kurt. He's from New Zealand, right? So there's, the good bunch of people. Anyway, listen, Patrick, thank you so much for coming on to the show. We got into such a great chat here. This is one that we could keep going, and I know we'll keep going with, over the years. So thank you again, and I really appreciate you doing this with us.
Thank you, Pete, for having me on, and I look forward to catching up again soon.
Thank you. That does it for this week, folks. Thanks to Patrick Pinschmidt for opening up his mind to help us figure out why he does what he does. You can learn more about Patrick and MiddleGame Ventures in the show notes on our website, moneyneversleeps.ie. If you like what you heard, please leave us a rating and a review on Apple Podcasts or Spotify, as it helps others to find the show. Thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early-stage startup investor focused on where fintech meets crypto and crypto meets Web3, and I run the Techstars Web3 Accelerator. There are plenty of links to the show notes on moneyneversleeps.ie on how to get in touch, so don't hesitate to reach out. Finally, till next time, thanks for listening. See ya!